Hey there, welcome back to Investory, your go-to place for building wealth one smart decision at a time. Ever looked at your wallet, saw a $100 bill, and thought, is this really enough to change my life? Well, spoiler alert, it can be. In today's video, we're going deep into how you can turn just $100 into $10,000 through smart investing. And nope, this isn't about gambling, quick schemes, or magic. It's about discipline, patience, and the power of compounding. Let's get into it. Chapter 1. Let's start with the secret sauce of wealth building: compound growth. Now, I know that might sound like a fancy financial term, but trust me, it's simple and powerful. Think of it like this. You plant a tiny seed, and with water, sunlight, and time, it turns into a big tree. That's exactly what happens when you invest and let your money grow. Here's the deal. When you invest $100 and earn, let's say, 15% in returns per year, you're not just making money on that $100. You're also earning on the money your investment earned the year before, and the year before that. That's compounding. It's like a snowball rolling down a hill. Slow at first, but bigger and faster the longer it rolls. So, let's run the numbers. Invest $100 today at a 15% annual return. After 5 years, you'll have nearly doubled it, about $200. Not bad, right? But stick with it for 10 years, and now you've got over $400. Let it grow for 20 years? You're looking at over $1,600. And here's the crazy part. You didn't do anything except wait. That's why every smart investor will tell you, time is your biggest advantage. The earlier you start, the more compound growth works in your favor. Even if you start small, $20, $50 a month, it adds up. It's not about being rich today, it's about being wise today so you can be wealthier tomorrow. Chapter 2. Now let's talk strategy. Where should you park that $100? Here are your best bets. Index funds and ETFs. These are low-risk, long-term investments that mirror the performance of the market, like the S&P 500. Historically, they return around 8 to 10% annually. Dividend stocks. These not only grow in value, but also pay you small chunks of cash regularly. Think of companies like Coca-Cola or Johnson & Johnson, steady and reliable. REITs, real estate investment trusts, don't have thousands to buy property. No worries, REITs let you invest in real estate with just a few bucks. The key? Start small and consistent. Invest that $100 and then keep adding $10, $20, or whatever you can afford every month. Chapter 3. Let's be honest, most people don't fail at investing because they chose the wrong stock or missed the hottest trend. Nope. They fail because they quit too early. The moment the market dips, they panic. They pull their money out, thinking it's over. But here's the truth. The market always bounces back. Think about it. Every major downturn in history eventually turned into a recovery. Whether it's a recession, a crash, or a crisis, the market finds a way to rebuild and move forward. So, when you see red on your portfolio, don't run. Stay the course. You don't need to be a Wall Street wizard. You don't need to spend hours studying charts or earning a fancy finance degree. What you really need: consistency. That's it. Just keep showing up. Keep investing, whether it's a good day or a bad one. Even small amounts add up when you're consistent. Let's say you keep investing $100 every month. Sure, at first it feels slow. You check your account after a year and think, that's it? But fast forward 10 years, 15 years. When you combine steady contributions with compound growth, that's where the magic happens. You're not just investing money, you're building a habit that pays off big time. So don't obsess over timing the market. No one gets it right every time, not even the pros. Instead, trust the process. Stay in the game, because when others panic and pull out, that's your chance to stay invested and grow. Remember, wealth favors the patient, not the perfect. Chapter 4. Avoid these common mistakes. Before we move on, let's cover a few things you shouldn't do. Don't chase hot stocks. If everyone's buying it, it's probably too late. Don't invest money you can't afford to lose. Don't panic sell. The market will go down. It always does. Just wait. Don't invest without research. Even with $100, know where your money is going. Be smart, learn, grow, trust the process. Chapter 5. The Snowball Strategy. Now here's where it really gets exciting. How to turn a simple $100 into $10,000, and it's not some get-rich-quick scheme. This is real, practical, and proven. The key? Regular contributions and the power of compounding working together. So imagine this. You kick things off with just $100. Then, every month, like clockwork, you add another $50 to your investment. Let's say your investment gives you a 12% annual return. Not impossible if you're in a solid index fund or a growth ETF. Guess what happens over the next 10 years? You don't just end up with a few $100. You end up with over $11,000. Yep, from starting with only $100. And here's the real kicker. It's not even about how much you start with. It's about how consistently you show up. If you can only afford $10 this month, that's okay. What matters is that you keep going, because consistency beats perfection every time. It's just like going to the gym. One great workout doesn't get you in shape. It's about showing up week after week. Same with investing. Keep those monthly contributions coming and reinvest your returns. That's crucial. Don't cash out those dividends or interest payments. Put them right back in. Let your money work while you sleep. This strategy doesn't require big risks or fancy stock picks. It just takes discipline, patience, and a long-term mindset. The earlier you start, the better. But honestly, starting today is always better than waiting for the perfect time. Chapter 6. Real-life stories. Need some inspiration? Let me tell you about Mike, just a regular guy who started with $100. He invested in index funds monthly, avoided unnecessary expenses, and reinvested his dividends. 10 years later, his portfolio was over $20,000. Not from luck, but from consistency. Or take Sarah, who used micro-investing apps like Acorns. She started by rounding up spare change on coffee and groceries, and within 5 years, she had $3,500 saved and invested. If they can do it, why not you? Conclusion. So here's the bottom line. $100 isn't small, it's a seed. Start now. Don't wait for the perfect time. Don't wait till you have more. Just begin. And hey, if this video helped you out, give it a thumbs up and share it with someone who needs to hear this today. Subscribe for more real talk money advice, and I'll catch you in the next one.